You wrote that dividends are at a record low. Why is that?
Dividend yields are at a record low. Two reasons. One, just valuations are pretty high. So, even if a company's paying out a pretty high percentage of its cash dividends, I mean, if their stock's trading at like 50 times earnings, it's going to have a low dividend yield. And then two, buybacks are popular. So if you go far enough back in the data, it was way more dividend focused and way less buyback focused. Now buybacks are a pretty significant component. So we're roughly on par. Like the bottom in dividend yield of all time is like the dot-com bubble. And we're kind of back down to that, like a little over 1% average dividend yield for the S&P 500.
So crazy.
Whereas, in the past, I mean, there were decades where it averaged 4%. Obviously, there were some really cheap times where you can get like a 7% average dividend yield. And right now it's down to 1. And that's also, when you do that stock versus gold comparison, most of those charts leave out dividends, which means over a very, very long period of time, even though it might look like a sine wave, it's actually stocks just completely crushing gold over, 50, 100-year period. But in this current kind of bear market in stocks relative to gold, even with the dividend, because the dividend's so low, it really has been a bear market in stocks versus gold for quite a while.
Yeah, it's crazy. Gold has been outperforming S&P even with those dividends. So what does the gradual print mean for Bitcoin?